What's up, guys? So in this video, I'm going to show you 3 different strategies that you can use in your trading to possibly make over $100,000 this year. I'm going to show you a lot of different examples as well as in-depth explanations on how I trade them and different ways you can use them in your trading. So let's go ahead and dive right into it. Now, the first strategy that I'm going to share with you is a strategy that I mainly use for my trading. It's the bread and butter setups that I use, and it's what I've been doing for the past 4 years of my trading. So let's go ahead and dive in. That first one is going to be supply and demand, okay? Now, supply and demand is essentially the way that banks and institutions trade. They leave different trails and breadcrumbs that you can figure out and trade with them. And so I'm going to show you exactly how that works. So supply and demand is the thesis that, price makes a low and then a high and then a low and then a high. And we see fast price action, okay? And anytime you see fast price action, that's when you know there's strong buyers and strong sellers, okay? There's a few different types of demand zones, and after this video, if you want, in the description, I do have an entire webinar going over how I trade supply and demand, so that's going to be a lot more in depth. But right now, I want to show you a quick overview of how I use it in my trading. So go ahead and look at eBay here. Supply and demand is basically where you want to look for fast price action, like I said earlier. So you can see here, if I draw in this path, we have a very fast move here, right? Price comes down, we have a small consolidation phase, and we have a fast move higher, right? Anytime you see that fast move higher, the base of where that move started is going to be where your demand zone is, okay? And vice versa for supply. So what you want to do is you want to take the candle right before that fast move. So in this case here, right, we have this candle is the low, we have 3 more green candles, and then here we have that explosive move higher, that very, very fast move higher. So when you see that, what you want to do is take the candle right before it, which would be this one, and draw a rectangle from the high to low of that candle. And we extend that candle out, and what happens is price comes down into that zone, and we bounce out of it, okay? Very, very simple, right? How the way that you want to trade this is you essentially want to get your entry right as soon as price hits that demand, put your stop right below it, and your target can be the most recent high that was formed. Okay, it's important that you want to stay with the trend when trading this strategy. Otherwise, you're going to end up with a few different losses. But again, let me show you the same exact thing. Price makes this move up here, right? We come down a little bit. We base at the $63 price, and we make this another fast move higher up. Again, we go all the way from $63 up to $70 in, around a little over a week on eBay, which is a very fast move, right? Typically, it's pretty choppy, pretty consolidative, but this is a very fast move. And so we can see we want to figure out where the base of the move actually starts. And so here we can see that we come down, we have 3 days of consolidation, 1 more day here, and this is where the real move starts. On this day right here, we get that fast move higher. So we take the candle before, the high to the low, we can extend it out like that, right? You want to even draw your zone down to the bottom of where the real move of the real low started as well. So I could draw my zone like this, and boom, we come right back into that zone. That's when you want to buy, put your stop below the low, put your target all the way up top here, okay? Now, obviously, you could say the same thing. Jordan, look, we have a move up, and then we have a consolidation, and we have a fast move lower, right? Fast move lower. So wouldn't this candle here, right, this candle right before this fast move down, wouldn't this be a supply zone? Wouldn't you want to get in short here? And the answer is yes. However, you got to keep in mind, this isn't an uptrend, right? Price is still making higher highs and higher lows. And so with that being the case, you don't necessarily want to look for shorts in supply when price is still in an uptrend, making higher highs and higher lows, okay? Now you can obviously do the same thing to the downside, right? We have this consolidation here, and we have the fast move lower, right? So price comes down, we have a little bear flag or consolidation, whatever you want to call it, and we have that fast move lower, right? So all I'm doing is drawing this out like this, and you can see what you want to do is draw your zones where that base is, right? Where that real consolidation period is, because that's where institutions are loading up, right? Price is coming here, they're getting all their fills, and then selling or covering their shorts when price is coming down here. And so when price comes back up to this area where institutions were loading up, they're going to want to defend that area, right? That's exactly what happened right here, right? So we take the candle before, draw it up to the high. We went a little bit above it, but if we take it from the real high where that, consolidation phase is, we end up holding there. So what we could have done is look to get short when price approaches this supply, put your stop right above the high, target possibly the lows down here, end up for a nice 4R trade, okay? So that's the first strategy. It's supply and demand. It's a very, very basic, very simple strategy. I use it all the time for my trading. It works very, very well. But let's go ahead and move on to the second one, okay? Actually, let me show you one more example before I do that quickly on BAC. Again, because I do want to say that supply and demand does work on all time frames. So I was looking at the daily. We can even move on to a weekly. If you look at BAC, right, we see a move up here and a move down and then a move back up. So you can see we have this move down. We have a gap, right? We have a huge move higher, explosive move higher from this low. If we take the entry from the gap fill price all the way down to the low, right? We could even do it up to the high of this candle, because again, this is where the fast move occurs. This is the base, right? We drop, we have this base, and then we rally up from here. Price comes down, we hold this demand zone. You get in there, put your stop there. And where do we end up going to the top of? We end up going right into a supply zone. Again, it's the same thing, right? Price makes us move up. We have a few candles of consolidation. We have this fast move lower, right? How do we know it's fast? Well, in 2 weeks, we went from $37 down to $32 in BAC, which is a pretty fast move for 2 weeks on Bank of America, right? So if I go and take out my rectangle, right, we could do it from this candle right here, right? This was the move right before this fast move as well. We take it from that gap there to the high, come up, and price easily rejects it, right? So we easily could have gotten short right about here, stop above the high of the zone, and we're making our move lower right now, okay? So 2 different examples on supply demand. Again, very simple strategy. I use it for almost all of my trading. Let's go ahead and move on to the next one, which is going to be a strategy that I call balance theory, okay? Now, balance theory, in a nutshell, is essentially support and resistance, but it's a little bit different, okay? So let me show you exactly what balance theory is, right? So balance theory is the idea that price is going to be in a consolidation period, right? Very clear high and low here, right? Just like this. So whenever a stock is range bound and choppy and back and forth, price is typically in what I call a balance phase. And when price is in balance, it always likes to rotate to both sides of balance. So when you see a very clear balance like this, the theory is that if price tries to break out of this balance zone here and it fails to do so, and we come back into this balance zone, price is going to want to rotate down to the other side of that balance, okay? So what you're doing is you're taking the trade when price fails to break out, we come back in, you're taking that rotation down to the other side of balance. All right, so let me show you a few different examples here, okay? So looking at Google, you can see here in purple, I have this balance zone drawn out, okay? And why is this a balance zone? Well, if we look at here, we have a very classic support resistance kind of, pattern going on right here, right? Very clear choppy, no clear trend going on. It's very back and forth, very up and down. And the way balance theory works is you have your zone, and you want to wait for price to fail to get the breakout, right? So right here, right, first example. Price comes down, we fail to get lower, right? Price comes back into this balance zone, and what ends up happening is we end up rotating to the other side, right? So this balance zone is about 120 to about 107, right? And so then what happens? Price gets to this 119, 120 area. We fail to make any move higher. We consolidate. We end up rotating back down. And then same exact thing, right? Rotate, rotate, rotate. We keep doing that, right? Now, if we're using, this 119 area, maybe we wouldn't have gotten in here, right? Maybe if we're just looking at this price action here, now we start to see that the balance theory forms. And now we draw our zone. And so if we go out and we look back, we say, okay, now right here, price failed to break out of this 119 high, right? We have this double top here, this, 2 highs, whatever you want to call it. Price fails to break out. And when you see that, you understand with balance theory that price is going to want to rotate down to the other side, right? Yeah, sometimes we may want to stay here and consolidate, then move higher. But majority of the time, with the whole point of balance theory is that price is going to rotate to the other side of that balance. So after seeing this false breakout, maybe the next day, you could have gone in short here, put your stop right above, and then target all the way down here, right? Setting up a very good risk reward, right? Got in short, stop above there, target down here, very solid 3R trade, okay? Same exact thing to the downside, right? Price now rotates down to the bottom here. We fail to really break down, right? We're not coming all the way down below 100. We come to 105. We immediately reverse back up, right? And so when you see that happen, you know, okay, price is back in balance. We failed to break lower. Price is probably going to want to rotate up to the other side around 119. And that's exactly what happens, right? And then the same exact thing happens one more time. Price comes up. Now we do get a few days outside of balance. And you may be thinking, price is breaking out. You know, I may want to look to get long. And then a few days later, we end up coming right back in. And so when you see that happening, you can tell yourself, we failed to break out. We're in strong balance zone. Price is probably going to want to come down to the bottom of this balance zone here around 107. And that's exactly what happens, right? We come up, pull back a little bit, and then we eventually get that breakdown and continue moving lower, okay? Let me show you one more example here on Meta, just like this. So Meta, again, on the daily chart, again, all of the strategies I show you today work on all different time frames, so you don't have to worry about it. But this one, again, on the daily chart, right here. So price, you can see you have a very, very clear balance zone. If I just draw this purple zone here, very clear support resistance, been back and forth. Obviously, we break out here, false breakout here, but this is where the real support resistance is in this kind of channel from about 172 to 155, right? So when you see this happening, you see this form, you can use balance theory to your advantage, right? So on this move here, price comes up, we break out, and we end up coming right back in. And when you see price come back into this balance zone, you can look to get short and target the other side at 155 because you know that's how the theory works. You know that price is going to want to rotate down to the other side of balance, right? And so what ends up happening? We come back down, we hold, we come up, we do the same exact thing, right? Come up, we don't get any follow through above this 172 area. You know, for a few days we hold, but really don't get any like bigger moves out of it. And price ends up coming back down into balance. So when you see that happen, you can get short. You can even wait for a move down to the middle of this balance area, around 164. Wait for a pullback up to the top of that balance again, because again, the top of this balance is going to act as resistance, and the bottom is going to act as support. So you can wait for that move back up, pull back, get short here, stop just above the highs, and target the other side of balance. That's exactly what ends up happening here, okay? So balance theory, I love using balance theory. It works great when you combine it with supply and demand as well. But these are two different strategies that you can use in your trading that will blow your mind and make you a lot of money. Now, I'm going to go into the final strategy here, which is a stop hunt strategy, okay? This one is very similar to balance theory, although it doesn't necessarily apply to balance in general, right? So let me show you an example on Etsy, okay? The stop hunt strategy is the idea that price is making a high. You know, let's say we're in an uptrend, price is making a high. We false break out above the high, and we end up coming all the way straight down, okay? And what's actually happening is that it's actually just a stop hunt. It's not a real breakout. So with this example here on Etsy, you know, there's a lot of people that are going to be short in this area. Now, where are they going to have their stops, right? Classic, you know, retail traders, they're always going to have their stops either above a recent high or a recent low, right? Classic support resistance, classic highs and lows. That's where they're going to have their stop losses. So when price comes above this high here, everyone who's short in this area is getting stopped out, right? Everyone who's short, they get stopped out. They have to buy their shares to cover. Price ends up ripping all the way to 148. And then a few days later, we don't really get any follow through. So similar to balance theory, we false breakout. We don't get much follow through. We end up coming crashing down. And when you see price come crashing down after a breakout, you know price is probably going to continue going lower because of two reasons. One, everyone who was short got stopped out, right? So now price wants to come back lower. And everyone who, you know, when that stop out happened, everyone got long trading the breakout, right? Everyone sees this as a breakout, they get long. So now what happens is you have a bunch of traders who are in long positions right here. And when you see traders who are in long positions and then price ends up going down right after, they're going to stop out of the trades. And when they stop out of the trades, they have to sell, which causes price to go down even more, right? So what ends up happening? Price moves up. Everyone gets in long here, expecting to move higher, and the price ends up ripping down. And so now you have a bunch of people who are trapped, right? It's called a trap, right? A bunch of buyers are trapped long in this 144, 145 area. And so what happens is price comes back up. We actually hit the supply zone mentioned in the first strategy earlier, right? So we have a fast move lower. We take the candle before, that's our zone. We come back into the supply zone, right? So everyone who's long now, they typically like to get out at their break-even price. So price comes back up, they get out break-even, and now they're sellers because they want to get out. So they sell and sell and sell, and price continues heading lower, okay? Same exact thing on mRNA, right? See it all the time. Right here, price ends up going high. You can see we have this huge breakout, huge squeeze. Good earnings, price moves up. We're breaking this high. Everyone's looking to get long. Everyone's, a bunch of retail traders getting long up in this price at this 195 area. Probably looking for a target that, that full dollar amount at 200. And we end up crashing right down, right? So, you have institutions and retail traders who are short here. They have their stops above this high. They stop out those people. They trap a bunch of long retail traders. Now price comes back down. Everyone who bought on this move here is now stuck, right? Everyone who bought on these prices up here, price is now under, and now they're, saying to themselves, I got to get out. I don't want to hold on to this. And price consolidates for a little bit longer, and we end up coming crashing down, okay? So you see price comes crashing down. Now everyone who got in long has to sell. That causes even more selling. And you just see a huge reversal. Price comes all the way down lower. You can see we actually get the same thing lower, right? Price ends up taking this low by not even a whole dollar, right? We just take that low by a tiny bit, end up reversing the other way higher, right? So price is always going for highs and lows and taking out different stops. When you see price take a higher low, and then we get that immediate reversal, right? We come down, we get that fast, immediate reversal. That's when you know it's a stop hunt and it's not a real breakout. It's not a real follow-through strategy breakout move. So when you see that, that's when you know, okay, this is my opportunity to get in short and play the reversal, right? Same exact thing happens right here. mRNA, come back, we have this gap down. We actually did it right here. You can see we have this consolidation phase, right? So you have a lot of traders who are buying and selling in this area. And what happens is you have a lot of people who are buying here, and the next day, right, price comes down and we stop hunt all of these traders. And then we immediately reverse, right? So everyone who was in long in this zone here, everyone who was buying shares, accumulating shares, right, they pushed price lower, stopped all of these guys out, and then eventually made price higher. That's probably why, you'll see sometimes you get into a position, it hits your stop loss, and then it immediately goes in your favor. And you're like, wow, how did the market know that, price was going to go right to my stop loss and then go in the direction? It's because that's how markets are designed to move, right? And so what you're doing with the strategies, you're taking advantage of it. You're saying, I'm going to wait for the stop hunt first, then the reversal, and then look to get in long for my position. And so this happens the other way around, right? Price comes up above this high here. We stop hunt. Everyone is looking to get in long positions here, buy the breakout. We're in an uptrend, looking to buy this breakout, whatever. And the price ends up coming back down, right? So now everyone who bought in long above $200, right, buying the breakout above 200, now they're screwed because price came back down, they're underwater, and now they have to sell. And price ends up coming all the way down here. And what you can do to get a good entry is combine it with the other strategies I was talking about, right? So I can even look at a weekly chart here. Or actually, I'll go down to the 4-hour. So what happens is price comes down. We have this 4-hour supply zone. So when you see this happen, we see that stop hunt. Price comes down. Everyone's underwater here. So they push price up to supply. You can look to get short and then target down here at this demand zone or possibly even lower down at these different liquidity levels, right? So we get that stop hunt, price comes down. You can use it with supply and demand or with balance theory, right? Use that to your advantage. You can combine these different strategies, and that's how you get a very good risk reward with a very good win percentage, right? Price comes back up into supply, so you could get short right around here, stop above this high here, and then target down here for about a 5-hour trade, okay? So these are 3 different strategies that you guys can use in your trading. Personally, I use all of them. I also use them in combination with each other and a few other different strategies and confluences that I use. But I also do have a free webinar linked below on supply and demand, as well as a free course linked below. So if you want to go ahead and check those out, learn everything about supply and demand, go ahead and do that. I also have a private Freedom Team mentorship group where if you want to join that and learn how to be consistently profitable in 8 weeks using a proven strategy that I learned, I'll break down and show you my exact strategy as well as give you one-on-one coaching through that. So if you want to do that, there's a link in the description below to go ahead and apply for my mentorship program. With that being said, guys, hope you all enjoyed this video. If you did, leave a like, subscribe, and also comment down below other videos I should make, and I'll see you guys in the next video.